Natasha, certainly got to give you props for the start of the year. You called this after sort of a big pandemic year, all the excitement over Disney Plus. What do you think is going to be driving this name going into 2022?
Well, Happy New Year. And, as you said, last year I was concerned about profitability and the risk that getting back to normal was going to just take longer than the street anticipated. And I think that's still a question. Last year I was right. S&P was up 27%. Disney fell 14%, so a 41% spread in performance. And as you said, it's despite Disney's valiant efforts on Disney Plus and that direct-to-consumer side, where they grew subscribers 60% this year. But the fact is, Disney Plus is still not profitable, and it's going to take more than digital content to fill the hole that was created by the loss in Disney's park segments, which used to represent 40% of Disney's pre-COVID revenue. So it was great this past quarter to see the domestic parks edge out of the red, but the segment is down to 29% of revenue today, and it's been expensive adapting to COVID. So we really need to see that the parks start to pull their weight, which is hard in this environment.
Yeah. Natasha, what do you see for the streaming sort of field at large? When you go into quarantine, you quickly discover which platforms you can't live without, especially when you have kids, as I do. I think we've watched Encanto about 100 times over the last few days. Do they all survive 2022, or is this, the year ahead, the year in which we see some of the players consolidate? I mean, over $100 billion expected to be spent content-wise. Is this sustainable?
I mean, I'm a heavy user of digital content because I have kids. And so we're using Disney, we're using all the platforms. And I think that there is still space for a lot of players because of all the content that's being created. So people are hopping from platform to platform. And, when it comes to where Disney sits in all of this, I'm not a super bear on Disney anymore. I think it's really a question of if, not when we step, when, not if we step back into the stock. It's trading at a more reasonable level when you value it on next year's earnings, closer to 30 times. But, when it comes to digital platforms, that can't save the day here. We need theatrical releases. We need to get back to the movies with our kids. I'm slated to go to Disney in January, and those plans are up in the air. So we really need to get that shift back to in-person as well. And hopefully it happens with a flash flood of Omicron like we've seen in South Africa. And it's possible we get back to a new normal in April.
I think my big question around Disney, particularly with the streaming platform, is, they've changed their customer base. They've gone to the retail customer. They've got to grow that customer. If you have kids, like I do, like Deirdre does, you're just going to keep paying Disney forever because you need access to Moana. How do you grow that? I mean, they don't have an additional customer segment the way they used to with, wholesale distribution to different cable networks. Where is the growth there after a certain point?
Yeah, I think they think it's international. So you saw in the last quarter that the average revenue per user went down because they had a promotion and were offering the platform for cheaper internationally. But, you also saw a slow in subscriber growth. So, as I said at the top of our conversation, they grew subscribers 60% this year, but they want to more than double where they are really in a couple of years. And I think that's a high bar. And international is going to be key to that.